What is going on, guys? I hope everyone had a good weekend. Today, I'm going to kind of go over what I'm looking for throughout the week and any sort of very important events that kind of tie back to Iran. I'll also be covering some stocks that I also like for potential long-term plays or even within 12 months or so. And just seeing patterns overall within the market. So, first things first, we'll go over kind of the historicals here. Um, I was doing research earlier today, pretty much these past couple days, and there's a lot of panic within the market. And the way that I view it is, it's an opportunity. With Trump and Iran and the whole war stuff going on, I mean the market is just selling off, but also oil is just through the roof. Um, you guys have seen that nonstop for the last couple days or even a week or so. Oil has just been going higher. Um, and while we see that, we technically see uh, tech or equities go lower, right? And then energy tends to perform better, or defense stocks, we tend to see that. And then, of course, the VIX, right? VIX is something I really use a lot of the time. It's like a fear ingredient index, just similar to what's already on SMBC. So, fear and index, kind of show you guys that. But right now, we are at extreme fear. And every time the market has been at extreme fear, has always resulted in somewhat of a dip buy. But that's not always the case because the market can go lower. And in that case, just use it as a source of confidence. And that's kind of what I do. Um, but essentially, so pretty much the VIX kind of correlates with that to an extent. When the VIX is higher, specifically very, very high levels, we tend to see the market go lower. And so here at this 35 handle, this was when I'm pretty sure we had the first stuff with Iran. Um, but there's been numerous events like the AI boom and things like that when we had Microsoft report earnings a couple of weeks ago. Um, but really on the high end was really during April, right? This was Liberation Day. We hit a 61 handle high, and then the market reverted, right? That was the best opportunity to buy long market into quality companies, right? I mean, everything was at a discount. Um, and then we also have 2020 when the VIX was the high of 86 handles, which is pretty crazy to see. Um, but yeah, so right now market is holding up decently well. I think going into this week we possibly are going to see a mean reversion across the board. There was news on X that Trump is saying that there's close to a deal, but that's just been going back and forth with Iran, saying that they have a deal, then Iran fires back saying they don't got a deal. So I'd be cautious, but the market is extended, so possibly see a mean reversion to the week, along with oil selling off, longing the tech names. So something I do want to look over is what has happened between times of uncertainty, and pretty much macro events, right? And this is a chart that I was doing research on. I sent this to a couple of my friends, and it just kind of goes to show the growth of $1 had you invested and cyclical cycles or just macro cycles overall. And I found this very valuable because it gets to the point of what I'm trying to bring to people is that, look, if you stay long in the market despite events like this, and instead of seeing it as a, oh shit, the market's gonna go lower, and everything's gonna drop, it's an opportunity to buy. So we had the Great Depression, the market dropped and it went higher. And you can see that here across the board. We had Black Monday, COVID was very short-lived, and then the market just continued to rally higher. And then here you can also see kind of the recovery, by the year and the decline. So in 2020, let's see if I can find this here. 20 2020. I don't know where that's at. Oh, there it is. The decline was 19%. So that just kind of goes to show that whenever events like that happen, is just to look at the overall picture. The market always recovers, but I also don't want to set that expectation, right? But that's just what historicals tells us. And it just kind of goes to show, right? Once again, the value of $1, the amount of growth that you would have had, if you stayed long and if you kept buying, right? Additionally, we got the market declines by MFS. And here you can clearly see by the date, right? We had the recession, we had post World War II, the Great Depression, the markets were down 86%. The first year, stocks were up 122% and 265%. So, whenever I'm hearing people like, oh, the market's going to go lower and I'm just going to sell my stock. I mean, you could do that. I mean, just, everyone has their own views, but, this is just goes to show how the market always recovers. And these are the times to really invest aggressively when the markets are in huge uncertainty. And same even for crypto. So yeah, you guys can see here in 2020, inflation spiked up, interest rates started spiking up. We had a 25% decline. So that is that there. I will leave this in the comments below if you guys are interested in seeing these sources. Um, but on top of that, also the 10-year yield, right? I mean, with Trump speaking with Iran and the whole war stuff, yields are going up because their investors are embracing for higher inflation. We've had the CPI reports come in, and PPI as well. Unemployment, there's not a lot of people getting employed, and there's a lot of layoffs as well mixed with AI, right? So investors are buying a lot of more treasury yields, demanding more. While that happens and oil goes up, that means the markets go down. But when yields go up, usually, what that does for the market is if you're a financial analyst and your underlying companies or underwriting companies, most companies are based off future cash flows, which means that they're discounting at the 10-year yield, right? So that causes market fluctuation to the downside when you see that due to the yield as well and oil going up. So that's something to keep in mind. Another thing that's been interesting is the 30-year yield. It's nearly back at 7%, um, despite with the war and all that stuff. So I thought that was very interesting. So one thing I do kind of want to talk about is some stocks that I'm watching going into this year, specifically when the market gets lower, is Hood, right? I'm not going to get into too much detail, but definitely keep an eye on Hood. The reason being is it's down nearly 50% from highs. It's at $66 right now. And with analysts, and Wall Street saying it's a strong buy, I think this stock could be really, really good buy and make at least 50% on your money, if not more. Hood is a stock that I don't think would go anywhere. Its platform is great. A lot of retail uses that platform. Their retention rate is great. And it's just a beginner friendly platform. So that's all I really need to know to invest in stock. And so just keep an eye on that. Another one that I'm looking into is Duolingo. Duolingo is a stock that I'm actually going to be pitching very soon. So I'll keep you guys updated on that when I post the model. But keep an eye on Duolingo. It's a really good platform. This has a lot of reasons behind why I'm invested in this, but this isn't a stock I'm eyeing. Amazon has actually been flat. So I'll show you guys that here. Amazon has been flat since April. This is the only name that I've been pretty much flat on. Everything else I've made money on. But however, despite this name being flat, I think that the market share that they have in AWS systems is still significant. That this stock is just too big to fail. It's such a big retailer, in delivery and vice versa. So I'm long Amazon. I love Amazon as a stock. I use the services all the time. So and that's something I like to say is if I use something and I believe in the company, I'll invest in it, right? So Amazon, keep an eye on that stock as well. Buy more of that. And then Bull stock, very, very similar thesis to HUD. Now I've brought it up to a couple of friends of mine. They're like, well, why Bull? Because HUD's already better, things like that. And they're absolutely right. But their retention is 98%. Their year over year growth is 12 or 20% on user base. So I don't think that Webull is going to be a huge stock in terms of maybe outpacing Hood, but I definitely think that Bull can somewhat beat up there with one of those trading platforms, right? I mean, every retail trader that I know that's a beginner, I was there, I was once there, has started either with Webull or Hood, and both are great platforms. So I'm long these names going into this year, and definitely keep an eye on them. Not financial advice, of course, but yeah. So that's kind of what I'm watching there. And that's pretty much it. So I'm going into pretty much ES again here, which I already did have pulled up. If we take out, let's see what we did here. If we end up taking out 66, 63, 63 this week, that should tell us where the market's probably going to go. So if we take out swing lows, but if we end up recovering above 64.12, that could signal a market mean reversion all the way to 65. or 64.55 there. So that's pretty much all I'm watching there in confidence with the VIX. VIX really just tells a story. So honestly, if I were you guys, I'd just watch this 31 handle and 31.84. So if price gets above that, and let's say we touch 35 handles, you can almost long the market on that, short the VIX into the week. So very, very straightforward. But besides that, I'm not really seeing anything else across the board. Everything else is kind of being patient with it and see what I see across this week. So have a good guys, have a good day, and I'll see you guys soon.